Hey everybody, how you guys doing? Welcome to episode 10 of the Real Estate Talk. I'm Abel Sir.
I'm Burhan Khan.
What's up, Burhan? How you doing, man?
I'm doing well. How about you?
I'm doing good. Again, this weather change is really messing me up, but I'm doing all right.
You got to adapt to it, because usually this time of year, it's hard to predict if it's going to be really cold, really warm. But, we don't get snow just yet, like other parts of the country.
Yeah. Well, so when I was in Michigan, it used to snow. I think the times I was there, it snowed like right on Halloween, like light, nothing that thick, but there was snowfall on Halloween, and the weather has dropped drastically already by now, right?
Yeah.
In California, I was a little spoiled out there because it's just consistent weather. Now there's cold. But cold for us would be like 55, 50. So
that's not really cold.
Exactly. Yeah. But it's that adjusting. But here, I was telling people, I'm like, I would go out to walk the dog in the summer, t-shirt and some shorts or pajama bottoms, flip-flops, and be out. These last couple of days, I've been trying to go walk the dog, same kind of outfit, and her and I both walk right back in the house and bundle up. So it's an adjustment as far as the weather.
When you lived in Southern California, did you own or did you rent?
I was a renter. I lived with my mother there, and then I had my own apartment as I got of age. But I didn't own in California.
I see. So this is something that we deal with a lot, especially as realtors. We help a lot of people rent properties, right? Yeah. Whether we represent the landlord or we represent the tenant, we always go through rentals.
Yeah.
And the one thing, especially, what kind of dog do you have?
She's a lab pug mix, the cutest thing ever.
Nice. How much does she weigh?
She's 35 pounds. She's about 5 pounds overweight, but it's okay.
Okay, got it. And what's her name?
Capri.
Nice.
Capri is a doll. Maybe I'll put a picture up so you guys can see.
Yeah, show everyone.
Yeah.
So these are all questions, believe it or not, that landlords ask the tenants when they move into their property, because they want to know exactly what kind of pet you have when you as a tenant, you're going to be moving into their house.
Yeah.
Because you don't own the house as a tenant, but you're going to be leasing the property for 1, 2, 3, however many years.
So let's break that down. Let's talk about what if there are viewers out there that are interested in being a landlord, if they own property and they want to go ahead and rent out their property because either A, they're moving out of state, or they're buying another home but they don't want to sell it yet. What are some advices that we would give landlords, right? So
correct.
If someone is coming in, or they'll contact us and say, hey, Burhan, Abel, I have this townhome, I have this condo, I don't necessarily want to sell it, but I want to rent it out. Can you help me rent it out? What are some qualifying questions that you would ask if someone comes to you that way?
One of the biggest qualifiers I look at two of the biggest qualifiers, I should say, are the credit score and the income.
So that's for the tenant. We'll get to that. Let's start with the landlord. So a landlord comes to you and wants to rent out their property. Do you have some qualifying questions for the landlord?
Yep. So for the landlord, I always ask them, what are they looking for as far as the rental amount, and do they have any specific qualifiers on the house itself? Are they looking to make some upgrades? Do they want to rent it as is? And that could make a difference, because let's say the house, they just moved out of state, right? Let's say they live here in Northern Virginia. They're moving to Florida. They're retiring. It's an old couple. They're getting the retirement package. They're gone. And they don't feel like doing much upgrades to it. Well, that's going to make a big difference, because then it's going to be a little more difficult for us to get grade A quality tenants into their property if it's not maintained or kept up as far as the appearance and everything else. And it's going to have some issues going in and things like that. Exactly. And it's not like they're selling the property. Yeah, I mean, when people are selling, I tell them, hey, you got to really do major upgrades to it to get the top qualifying price for it at the market value. When you're just leasing it or renting it, you don't have to do that, but you have to at least make it look a little nice in order to get a really great tenant with a great credit score in there and good income.
So for me, some of the qualifying questions that I ask landlords when they come to me saying, hey, I want to rent out my property, I try to set the expectations off bat right away, right? If they're expecting to have this one property and they're going to just make a ton of money and live off of that property, it's very unlikely, right? You're only going to make $100 to $200, $300, $400, maybe if you're on the right trajectory with your mortgage and your what you owe versus what you're renting it out for, then you could potentially make like $1,000. You need to multiply those properties to really be able to maximize what your cash flow and your income would be. So the first thing I do is try to set the standard. Say, hey, look, what we're doing is paying off your mortgage and making a little bit on the side for you to put to the side to be able to pay for repairs and things like that. So if it's just one property, you're banking on the equity growing year over year. So then when you are ready to sell, then your mortgage is being paid. So you're collecting that equity, not the tenant. So that's the first thing. So I try to let them know, like, hey man, unless we have on a whole apartment building, or we start off with one and you multiply it to 5, 6, 7, 10 properties, don't expect to quit your day job and live off of the rental income that's coming in for that.
Agreed.
Right? Yeah, usually for most people, it's going to pay off your mortgage. You're going to make a couple hundred each month and then build from there, right?
Correct.
So that's the first thing. So people think like, oh, I have a rental property, I'm going to make this whole lot of money, I'm quitting my stable job. No, that's not how that works.
It's just, think of from a landlord's perspective, and you're thinking like an investor.
Yeah.
It's just another asset similar to a 401k that it'll be there when you retire, especially if the tenant, which they're just slowly paying down your mortgage.
Yeah, exactly.
That's all it is.
And then the other thing that I try to let them know is that what kind of tenants do you want? Do you not want pets? Do you not want like a family? Do you want somebody that has 3 times the income, 2 times the income? Are you willing to accept Section 8? Like, I ask all those qualifying questions to know on hand who I market it to. So if you have less than 4 units, you can rent to anybody and deny to anybody you want. You have that right. There is no discrimination per se on renting just one townhome. You can rent to anybody. You can say, I'm just going to rent to this person only.
Correct.
You just can't advertise it.
Yep.
So as much as that sucks, that's the right of the landlord, right? They can rent to whomever and whoever they want. Then the next question that I go and ask is, once I get somebody in this place for you, are you going to maintain the property, or do you need a property manager, right? Mm-hmm. And you can touch on that a little bit more, because we can put somebody in for you for a fee.
Yep. But
outside of that, our job is done.
Exactly.
Right?
Mm-hmm.
So for you, I know you do property management a lot.
Correct.
So what are your fees, right?
So for property management, it's 10% of the monthly rental amount.
Okay.
So let's say the monthly rent is $2,000, it'll be $200 per month.
Okay. And then for that 10%, what are your responsibilities, or what are things that you take on for the landlord for that fee?
So it depends. There's a structure. Property management in general, it is what it is. You're managing the property. Mm-hmm. But if there's some extreme circumstances, for example, let's say the tenant just stops paying the rent and then we have to go to court, then there's an agreement in the property management agreement where if they want us to represent them in court, they have to pay an additional fee for representation in the certain courthouse, wherever the county is.
So as a property manager, do you collect the rent and things like that, or do you so for me, when I do property management, so I have a property that I manage as well. Mm-hmm. They pay the landlord directly. So I don't take any money transactions.
Correct.
They pay the landlord directly, but they contact me if there's any repairs, if things are not working the way that they're supposed to. If anything that has to do with the house outside of the payment, they can contact me. So I'm like that contact point. Now, I don't do any repairs or anything like that, but I can coordinate for my fee. I can coordinate those fees, right? So dive deeper into that, like what exactly?
As a property management company, we collect the rent and then we reimburse 90% of that rent back over to the landlord. If there are any issues, let's say there's a leak, the electricity stops working, anything happens, all of a sudden they see rat problem, then as a property management company, we have to take care of it. Of course, we're going to communicate with the landlord, let them know, hey, this is going on, but we're going to take care of it.
Okay.
So that's, as a property management company, that's why we're earning 10% of the rental amount monthly. Otherwise, why would the landlord pay us, right?
Okay, exactly. It's mainly for headache for the landlord. Relief of headaches, right?
Yeah, exactly. Especially in this area, if they have just one property, sometimes they think, I just have one property. I live 10 minutes down the street. I don't really need your property management services. But if they move out of state, for example, this older couple, they're moving to Florida, they need the property management.
Yeah.
But if they have dozens of properties, they really don't want to take all that on.
Yeah. So, and the same thing for me, like I said, like I have property in Michigan. I can't take that on. Even if I wanted to, I'm 800 miles away. So I can't tend to that. So for me, it makes sense to have that property manager handle all that day to day and then just, give me my portion when my portion is done. I have that fee and I understand that fee. So for me, it's more so of the convenience of I can't fly to Michigan every day, every week to manage that. I need somebody there. That's the cost of doing business when you do work out of state, right?
Exactly.
Now, what about maintenance as far as lawn care? So if you have a townhome or a single family that you're managing, does that include the 10% that you charge as far as the land care?
So that's a great question. Lawn care, it's usually the tenant's responsibility, but it's a case by case basis, right?
Yeah.
Most of the time, it's the tenant's responsibility. But again, depending on the house, a single family house, it may become the property manager's responsibility. But most of the time, it is the tenant's responsibility to take care of the lawn. Front lawn, back lawn.
And that would be written in the lease or
in the lease agreement.
It would explain that that's their responsibility. It's no removal, things like that. Now, if you're in a townhome, sometimes that HOA covers those things.
Exactly. And that's why, as the property manager and the realtor, you have to do your due diligence, read through the HOA guidelines, see what's included, see what's not. And then if it's not included, then see whether or not it should be the tenant's responsibility. And worst case scenario, if it's not the HOA's responsibility or the tenant's, then as a property manager, you have to find a way to get that taken care of.
What are some benefits of renting out your property? So for me, I say, hey, if you're in a position where you don't have to sell your home, I always advise this to any one of my clients that are thinking about getting another home or something like that, especially if they bought with a 2%, 3% interest rate. If you're in a position where you don't have to sell your home and you can rent it out and just continue to hold, I always advise them to do that. Whether it's in my best interest for them to sell or not, I try to look out for their best interest and say, hey, keeping this property is going to serve you better in the long run versus not keeping that property.
So that's a great question, Abel. A lot of the big banks are talking about this right now, as well as the CEOs of Freddie Mac and Fannie Mae. We're kind of in a phenomenon right now where we have really low inventory, and that's due to the low interest rates that were locked, pre-COVID and post-COVID. Yeah. So you have a rate of, like you said, 2%, 3%. Your mortgage is between $1,000 and $1,500, right?
Why would you sell?
Yeah. And even if you're moving, this is the crazy part. A lot of people are moving out of the DC area to New York, Pennsylvania, Florida, West Coast, wherever. And in their mind, they're thinking, okay, my mortgage is $1,500, let's say. I can rent this townhouse out between $2,000 and $3,000. When I can pocket almost $1,000 or more, why would I sell when I can just rent this out, even if I have to hire a property manager and pay them 10%, but still pocket a really insane amount? Why would I sell the property when I know in 20, 30 years the property value is going to double. It makes no sense to sell it right now.
Yeah.
Maybe in 10 years, 20 years, but this is pretty much my retirement egg.
Exactly.
So that's why most of them don't want to sell right now. And that's why we're stuck in this phenomenon where the inventory is going to stay really, really low.
Really low, yeah.
Yeah.
Now, that's all the pretty side of renting out your property, right?
Correct.
Now, what are some ugly sides? So, if something goes wrong with the property, that's your responsibility.
Correct. Yeah. So there are some drawbacks to renting it out. It can become a headache. I've dealt with, some landlords that unfortunately get really poor tenants. Tenants don't pay. And unfortunately, when they don't pay and you sign a lease agreement, you have to take them to court. And that becomes a really ugly situation. Worst case scenario, they don't pay, you take them to court, and then it keeps on getting extended. Then you're over here paying a mortgage, tenants living for free. It was really bad during the COVID times, because the government granted everyone to live for free, but fortunately they covered your mortgage.
Yeah.
So it was a really tough time. Now, if they don't pay, you have to take them to court and start the eviction process.
And that's the part where the ugly side of being a landlord, right? Where, hey, if your tenant doesn't pay, you can't call your mortgage company and be like, hey, man, they're not paying, so can you give me a couple of days? Like, they're just not paying me. So that responsibility still lies on you. So if you go delinquent on that, it's not affecting the tenant. I mean, you're going to obviously put them in eviction process and things like that. But if you don't have the capital or the money that's set aside to pay that, that's going to come back to you. That can lead to, if you've bought a house and now you have that mortgage to worry about and you're banking on this rental property to pay and hold itself. If they don't, you can potentially lose that property.
Why do you think, Abel, whenever you get an investment property, the mortgage company makes you put not just 20 or 25% down, but they charge you one more point? Did you notice that? They charge you a higher interest rate, but additionally, they make you put more of a down payment. And also, they make sure as an investor, you have at least 6 months reserves.
Yeah.
The reason they do that, because as a bank or an investor loaning you so much money for your investment property, it's a risk. Because just in case the tenant doesn't pay you the rent, they want to make sure you have enough money in reserves to pay the mortgage company back. And you don't start giving them excuses saying, oh, hey, the tenant's not paying me. Can I skip the mortgage for a couple months? They don't want to hear it. They want to make sure you continuously pay the mortgage company back.
And that's one of the things that I do, like with one of my properties. The little bit of money that I make, it's not like, yes, I'm spending this. Like, no, that goes, I just put it away because at the end of the day, there are things that are going to happen. You're going to have some repairs that you have to fix. And those are responsibilities, especially, let's say if the toilet is broken and they can't flush their toilet, like then that becomes like a health concern.
Exactly.
Then that becomes, so like you can get in the weeds of all these issues that can come across because you have to take care of things as a landlord and you have to do them in a timely manner. A lot of people think like, oh yep, I rent it, don't have to worry about it, but you actually get a lot more responsibility that falls on you, and the law protects the tenant to get these certain things done. So the word that people use a lot is like slumlord.
I was just gonna say that, slumlord.
Yeah.
So that word has a definition to it. The reason quote unquote slumlord exists is because if there's a problem, let's say there's a leak coming, or the appliances stop working, we need those to live inside the house. But if the landlord, quote unquote slumlord, doesn't do much about it, and you're going through every month paying him rent, and he just tries to avoid at all costs to do anything about it, then not just is he a terrible landlord, but his property is going down in value.
Yeah.
Remember a few weeks ago we had Imran over here, the home inspector?
Yeah.
The reason his job is so critical, you have a home buyer. He wants to know the condition of the property. He can pretty much figure out, okay, was the seller taking care of the property? Or was he a slumlord that was just getting by?
Exactly.
And is the house full of problems, or is the house ready to move in?
Exactly. And that's something that you have to look at like if anybody that's out there that's wanting to have some investment properties and become a landlord and not necessarily just flip. They want to buy and hold and rent out. Like, it comes with a slew of responsibilities. You have that rule of the 20-mile
20
radius.
mile radius, yeah.
I'm more open to out of state investing, but you have to know those risks that come. Like, so for you like the idea of being able to go see, assess the issue, and then fix the
Correct.
issue.
Exactly.
Know exactly what's being fixed.
Yep.
It gives you a little bit more of a peace of mind. For me, if it's a trusted company, I can put my trust on them to know that they're going to take care of things. Those are all things that landlords look at, right?
Correct.
So anybody that's out there that's interested in trying to become a landlord, my best bit of advice is get with an agent like myself or Burhan that can kind of walk you through that process. Because a lot of people think like, oh, this is a piece of cake. I'm going to rent it out. I'm going to be the property manager for it myself. I'll be fine. I'll just put it on Craigslist or put it on Zillow or wherever, rent it out, and then I'm good. But there's laws. There's things that happen. Like, if your landlord doesn't pay, you can't just be like, all right, get out.
No,
like
you sign a lease agreement, especially in the state of Virginia.
Yeah.
And if you want to evict them, there's a process you have to go
Exactly.
through. It's not that simple where you can just kick them
Kick
out.
them out. So
yeah.
You're in a sense, and that's where it comes to the screening of tenants, right? So
Yep.
you have to make sure you get the right type of tenant. So when a landlord or a property owner contacts you, what are ways you screen out potential tenants for them?
So there's a few things you always want to look at. The two major components are the credit score and the income, right? Mm-hmm. So the credit score, I always really stress this. The credit score is a defining factor. You look at the credit score, and I always tell everyone no credit is better than bad credit.
Yes.
If they just moved into the country or they just turned 20, 21 years old, 18 years old, and they never established their credit,
Yeah.
then that's better than having poor credit. If someone has a credit score of 400 or 500 and they were always late on their credit card payments, they were always late on other loans, how do you know they're not going to be late on your rental payment?
Exactly.
So you have to look at that.
If they can't pay a $60 credit card bill, how are they going to pay your $2,400 rent on time and make sure that they take care of those things? Now you can say, well, people are going to pay for the roof that they live over, but you gotta know that tenants also know the laws too.
Yeah, exactly.
So they know how to take advantage of certain things, and
Exactly.
maybe they don't have they're like, my credit's already shit. I don't care. I know I can live in this house rent free for 4 months before I get kicked out.
Exactly.
Like, so they'll, as much as that sucks, there are people out there that are like that will take advantage of that. And credit score, running someone's credit score and seeing their rental history and things like that gives you a good judge of that person, right?
It really does. And I always go with the saying, don't judge a book by its cover and whatnot. Mm-hmm. But I kind of stress to all landlords, judge a credit score by its cover. Look at that number.
Yeah.
If it's over 700, 800, then they're going to pay you rent no matter what. They might, push you to get this fixed, but they will pay you rent no matter what, because if they're on time on all their other payments, their credit card bills, their car loan bills, if they have a mortgage, their mortgage bill, they will pay you rent on time.
One bit of advice that you gave me that's kind of stuck with me was, when you put in a tenant that has a 700, 740, 800 credit score, you're leveraging it, because someone that has a 740, 800 credit score, they have something to protect. So the next topic that I want to talk about with you is, as a tenant, what are some things that you can do if you're trying to rent a townhome, rent a home? What are things that you should fix before you go into that route?
As a tenant, when you're looking to rent, always have a couple things ready. You have to have the security deposit ready, and you have to have your budget ready. Look at your credit score. If your credit score is subpar, try to fix it first before you go and rent. For example, if you have some collections, pay out those collections. If your car recently got repossessed, get that paid off first. Because until you fix everything, your credit score will not go up. If you just go with the credit score of 500 and start applying, no one's going to approve you. You're just going to go in and waste even more money when instead you could have used that money to fix your credit and then get an approval.
I can't stress enough that that's what the first thing. There's a reason why people look at your credit score before they rent a place out to you or things like that. So those things do matter. Now, someone that's 18, fresh out of high school, 22, fresh out of college, they don't really have established credit. So what are some ways that they can combat that? So I know we have co-signers.
Co-signers, right? Yep. That's a huge one, actually, because a lot of times, if you're 18, 19, 20, 21, you just gotta, let's say you just graduate from college, right? You're moving to a new area and you need to rent an apartment. Your parents aren't with you. Parents should co-sign with you. If your parents co-sign with you, let's say you don't pay the rent, but your parents, they have a lot of money in their bank account. If your parents co-sign with you and you don't pay, then the landlord can take your parents to court and they don't want to deal with that. So they'll cover you. Your parents basically become your collateral, and the landlord will feel a lot more comfortable with that.
Just knowing that you have that support, that backing. Now, here's another great thing that you and I both do. Me more so for my nephews and you for your kids. If you, to establish someone's credit, so you want to set up, and this is for the parents that are out there, you want to set up your kid to have the best advantage, right? So if they're in your household, they're, from the age of 1 to the age of 17, add them to your credit card.
Yep. So what you do is, me and my wife, we have a credit card with a big bank, and we added all of our kids as authorized users. Now, they're not 18, so you can't set up a credit card for them.
Yeah.
So we added all of our kids as authorized users, and being authorized users, we just pay the bill. I'm pretty sure all their credit's already over 700. So let's say when they turn 18, they want to go get a lease somewhere. Their credit's already going to be excellent.
They want to go buy a car, get a lease. They've already have established credit. And the main thing is, so like, how old is your youngest?
Youngest is 1 year old.
1 year old. And you added them to your credit card
as an authorized user.
As an authorized user.
Yep.
By the time they're 18, they're going to have 18 years of credit history.
Yep.
So that's something, that's a hack for a lot of parents that are out there that don't know that, is that you can do that to set your kids up so that you don't have to be a co-signer.
Exactly.
Or they don't be in a position where they are going to have a hard time when they're off in college or, want to be independent. You can start establishing their credit. So someone, your 1 year old in 18 years, if she, is it a girl?
It's a girl. Yep.
So she can, in reality, won't have a hard time to buy a home at 18 because she'll have 18 years of credit history. And now that can also work in the opposite, right? If you miss a couple payments and
it falls on me.
it falls on you and the kid as well, because then that affects their credit score as well too. So you have to be able to continuously pay that and make sure that you do that. You don't want to put them in a position where you add them as an authorized user and that ends up hurting them. So
exactly.
That's the balance between it. But like I said, people that have 400, 700 and 800 credit scores, they have an incentive to continue to pay their creded card and all that because they want to protect that.
Yeah, and that's how everything is driven here in this country, right?
Yeah. Sometimes credit is more valuable than actual cash.
Yeah, it is, because cash is great, but credit, if you ever need a loan, whether it's a mortgage, a car loan, or if you want to start a business, they all look at your credit. Because if you have great credit, then they're incentivized to give you a loan.
Now, there's a lot of people that come from out of the country, right? If they're trying to rent property, or they just got their social security card, don't have credit, or they have an employee ID number and not a credit card, what are some ways that they can do to kind of establish that, or be able to if they don't have a cosigner or anything like that, how can they get into housing if they need housing?
So one thing that as a property manager we usually look at is no credit is better than bad credit, number one. But then we want to look at the income. And that's one of the other metrics you always want to look at, whether it's a property manager, a landlord, or just as a realtor, how much income they make as a tenant when comparing to the rental price.
Yeah.
And we usually want at least 3 or 4 times or even higher the amount of income compared to the rental price. Let's say the rent rate is $2,000 a month. They have to make at least $6,000 or more. We prefer $8,000 or more per month in order to afford to pay the rent. Let's say the rent is $2,000 and they only make $3,000 or $4,000 a month. There's no way they'll be able to afford that because they need enough money left over to pay for food, gas, groceries, car notes, everything else.
That was one thing that I told this a client of mine as well too, who didn't have so good of credit. I said, hey, okay, so your credit's at this level. I said, what's your car note? He said, $800 a month. I said, buddy, if you want to get a place that's $2,200, your credit card is here. You're paying $800 a month on your car in general. So that's not counting. That's your car note. That's not counting your insurance. That's not counting the gas. So you're already living above your means, and you're looking for places that just won't get you in. So that's the one thing that people have to realize too, is you have to live within the means, right?
Correct. You should. And if you only make, a certain amount, let's say you make $5,000 a month, and you're trying to rent a place around $3,500 or $4,000 a month, that doesn't make any sense.
Yeah.
Now, if you're moving in with a friend, or you just got married, that's a different story. 2 sources of income.
Yeah.
So we're having a completely different conversation. Another thing property managers, realtors, and landlords always need to look at, even if someone has a significant source of income. Let's say someone makes $10,000 a month, right? And they're just renting out a place for $3,000. Sounds great, right? Mm-hmm. But what if they have so much debt? Their credit score is grade 700, but they have a car note, like you said, of $1,000.
Yeah.
All their credit cards are racked up. Their credit cards are maxed out. They have a student loan. Mm-hmm. They have a second car loan. They have this, unsecured line of credit.
Yeah.
They have another loan that we don't even know where it's from. Then you start questioning, okay, this guy is loaded up with loans, so many loans, and we don't know, it's a high risk. We don't know if we want to rent it out to him because worst case scenario, he just won't be able to afford it. And then we have to look at his job history. There's all these other factors we have to look at. It becomes a bit shaky at that point.
At that point, yeah. And then, so we have that. We have, someone that's coming in. You look at their credit score. Now, let's touch a little bit on Section 8. Okay. So, as a landlord, I'm a Section 8 landlord. So I rent out a property that's has a Section 8 tenant in there. The benefit for me is that, hey, that's usually has been a long-term tenant, right? And it's usually never had any issues with rent being late. So those are 2 positives that I take from that, right? Rent's always paid on time. Usually they're in there for multiple years rather than a quick turnaround when you rent to somebody that is not under Section 8, or that people that pay off their income based only, they tend to, if they're renting, they don't really stay there that long, unless you there are some that do that, right? So what are some benefits you think with Section 8 tenants and some disadvantages as a Section 8 tenant?
So one of the best benefits of Section 8 is fixed income, pretty much. You're guaranteed that money. Because someone gets a new job, let's go back to the $10,000 a month example. This guy just got a new job. Yeah. You feel great. Rent's only $3,000 a month. What if he gets fired in 3 months? Then he can't pay you rent. Yeah. Then you're in big trouble, right? Mm-hmm. Section 8 is guaranteed income. You're going to get the money from the county. The county just has to do an inspection on the property, and then they're going to send you the money every month. The drawbacks to Section 8 are you have to make sure that the tenant has great credit. But depending on the size of the family, here in Northern Virginia, sometimes they can damage the property, but you have to just do your due diligence and make sure they have good credit.
Yeah.
And this goes back to the beginning of doing your due diligence on the tenant. If they have good credit, they're less likely to damage the property. It goes back to everything.
Yeah.
That's why I always stress everyone, check the credit history and check the credit score. If they have great credit, they won't damage the property. Yeah, if their credit's around 500, they're more likely to damage the property too.
Yeah. I have a hard time, I guess, associating damaging your property with credit score. Now, you can say like, they're more sustainable to not take care of the property, but I just sometimes I feel like people fall on hard times and their credit scores get hit and things like that. But yes, that's usually a telltale sign. If somebody has a poor credit score, then they don't care much about certain.
It goes back to what you said earlier. If someone has a 700-800 credit, don't you think they'll do everything necessary to protect it?
To protect it, yeah.
So if someone has a good credit score, and if they damage your property, let's say I own a house, right?
Yeah.
And you want to move into my house, Abel, right? Mm-hmm. You move into my house, and I notice that you completely destroyed the kitchen. It's worth $10,000.
Yeah.
Right? And I ask you to fix it. You refuse. Your credit score is 800. What I'll do is I'll take you to court over it.
Yeah.
And I'll take proof of that. And then once the judge agrees with it, then I put a judgment on you, and then your credit score is just gonna fall.
Well, that's true. But also, I think that's where security deposits come into play, right? Too.
Correct.
Because obviously, sometimes 1 month's rent is not going to be enough to fix
cover
all the damages.
Yeah, that's the thing.
Now, I have a question here for you. Let's say that happens, where your scenario where they damage the kitchen,
and it exceeds
the security deposit. At that point, can you still get a judgment on?
You can.
Your
I had a personal experience before. I owned this property in Alexandria, which I sold and I regret. Right. Mm-hmm. I bought it after COVID in 2009. I believe I told you the example.
Yeah.
And I sold it in 2017. The tenants that lived there, they damaged the property, and then I had to fix it in order to sell it. I still made good profit.
Yeah.
But then I ended up taking them to court. And then the judge, he sided with me that they owe me a significant amount of money. I was going to place a judgment on them, but instead we made a payment arrangement for them to pay me a fixed cost every month.
Okay. See, that kind of works where
that works
if
out.
they don't pay you, then you can affect their credit.
But the key part to that is, without going to court, they don't really come to an agreement.
An agreement, exactly. Yeah. And that's the thing too. It's just it sucks when you have to involve the county or the court system, but that's just the cost of doing business.
I mean, that's how everything works. It's the law, right? For example, if I start driving 80 miles per hour, then I won't care until the police pulls me over, right?
Yeah.
And then that's what it takes. People will continue breaking the rules of the highway until they get a couple tickets. Then they'll start saying, okay, I need to start obeying these rules of the county.
Yeah. Now, this is something that I've saw more prominent in the DC metropolitan area, right? A lot of people tend to rent out their basements. Mm-hmm. How does the law work in Virginia as far as that? Same type of, you get under a lease and all that. How's that vary versus renting out your whole townhome versus, hey, I'm still living upstairs, I rent out the basement?
So this is happening a lot more frequently. People are renting out their basements.
Yeah, I see that mainly here, honestly.
Yeah, you just can't put an oven in the basement, especially a gas-lined oven. Mm-hmm. It's because that can really cause an issue.
Fire hazard.
It could be a huge fire hazard.
Yeah.
There was recently a house that got set on fire in Woodbridge.
Yeah.
So I'm sure everyone's heard about that. It was really unfortunate. My prayers go out to that family. But that they're trying to prevent anything like that from happening. So if you have a gas oven installed in the basement, the county will not allow that because they don't want houses to be set on fire.
So to some of our viewers and listeners out there that are thinking of, hey, I rarely use my basement, I want to rent it out, what would be the process for them to go through that? Because you said they can do it one or two ways. They can just rent it out without the gas stove oven, and then just rent it without anything, which I don't advise anybody to ever do that. Or they can go through the process of registering with the county that they're planning on making this a rental space and go through all the inspections and get all the permits, which I always advise people to do that, because then now you are legally protected in a sense, right?
Correct. So I will get the permits, and then all you have to do is install 2-3 things. You don't need a full-on kitchen like you have upstairs.
Yeah.
You just need a fridge, you just need a microwave, and you just need a sink.
Yeah.
That's it.
Now, it just can't be a gas oven stove. Could it be an electric stove?
Technically, you can. And I would get a permit from the county because they have to send an inspector
To get that installed.
Exactly, to see how it will be set up, if there's enough space in your basement. But even without an electric stove, depending on who you're going to lease it to, let's say it's a single guy, he may not need it. He might just want the microwave. He goes, works 8 to 10 hours a day. He comes home, just sleeps.
Yeah.
So he may not need the stove. He might just want the microwave.
Yeah. Also, I remember an instance earlier on with us where it was a single family house. It wasn't a basement, but they converted the backside of the house into a 1-bedroom apartment.
Yep,
and
I remember.
The county came in and was like, no, you got to take this stove off. So it's not necessarily just for basement purposes. It's just code with any type of building when you're doing those things. Now, that's not to say you can't do it, and this is where I stress to people, especially in our community, like people like to go around from having to do what they have to do, right?
And that there's a reason to that. The county actually cares about everyone. They don't want houses.
That's debatable, but okay.
They don't want houses to be at risk.
Yeah,
because the last thing we want is more houses, being set on fire or anything like that.
Yeah.
So you have to really go through the correct protocol, and make sure everything is done with the due diligence.
Because that like we said, like that falls on you. So unfortunate thing, like you said, that fire in Woodbridge. If the people in the basement or wherever the fire started or however, if they wanted to take legal action against the landlord, they technically can, because they weren't up to code with certain things, or they were supposed to do so. Like that is a responsibility that you take on. But if you go through, like, and a lot of people, and I disagree with this strongly, a lot of people like to find loopholes or ways around to not have to do because they don't want to pay something, right?
Yeah.
But if you go through those processes, go to the county, go to do everything that you have to do, yes, you're going to end up paying a little money, but in the long run, that little money is going to go a long way. Would you rather have that or have a judgment against your house?
That's why it's always better to do things the right way. But when you try to take shortcuts, and this applies to real estate, this applies to life, right?
Yeah.
Shortcuts don't help you in the long run. Then we learn the hard way, and then we figure out, okay, let's do things the right way.
Exactly. And that goes to even reporting that income that comes in and things like that. Like, yes, a lot of people do this, and I will be the first to tell you that a majority of people don't do it the right way.
Yeah,
unfortunately. They call it house hacking, and that, yes, it's helping them pay their mortgage and things like that. But people you got to look at it. I look at things always the big picture things, right? Mm-hmm. Yes, I'm saving some money now, but in the grand scheme of things, how is it going to help me, right?
Correct.
You can go from, so I'll use a perfect example. A lot of business owners will use the tax benefits and report losses versus reporting gains and things like that. But then when they go, and I've had clients like this, when they go to try to go buy a house, their income that they're making is not enough to buy a home. Mm-hmm. When if they would have did it the right way, yes, you would have paid a little bit more tax.
Then you would have been qualified.
But you would have qualified to buy a home. And I'm a big proponent in that. Like, it's in the long you got to look at things not in short term. You got to look at them in the grand scheme of things, right? With that being said, I mean, it's a lot of options.
One more thing I wanted to touch on as far as property management and leasing. Everything is going great. You know, your tenant's excellent. Usually you decide on a 1 year, 2 year lease. When you're coming upon the end of the lease, you have to be proactive. Whether or not you hire a property manager, you have to be proactive, because 60 days prior to the end of the lease, as a landlord, you have to decide whether or not you want to continue the lease or not. Mm-hmm. And if you decide to continue it, I always encourage to, you know, increase the rent rate a little bit. Or if you really love the tenant, things are going well, and you just want to keep things the way they are, then just make sure you renew the lease.
Yeah.
Because if you decide to wait,
go month to month, and
you don't want to do that.
So, landlords, I always encourage them to do 12-month lease.
12 months, exactly.
If you're a tenant, I always encourage you to go 24-month.
Yeah.
Again, that's me playing both sides in a sense. So if I'm representing the landlord, I'm going to look out for their best interest. If you do a 12-month lease, at the end of that 12-month, you can add a percentage to the rent, versus a 24-month where you can't do anything for 24 months. So I always say 12-month lease if you're a landlord. If you're a renter and you know you're going to be there for a couple years, do a 24-month lease, because your rent amount is going to be the same for 2 years versus that going up.
Exactly. What's funny is I have this one, it's a friend. I know her, she owns a house in Woodbridge.
Yeah.
She got a lease locked for 5 years back in 2019.
Yeah.
How do you think she feels?
She's probably pissed off at it because she's paying 2019 prices when it's 2024.
Yeah, it's finally maturing, but it's basically like, you know what CDs are at bank, certificates of deposit?
Yeah.
Imagine like you took all your money, locked it in a CD for a 5-year period, and you can't touch the money.
You can't.
That's what she feels like. You know?
But then for her, it's at the same time, it's like she has 5 years of rental income guaranteed, and it's not like your mortgage is going up each year. So
there are pros and cons, but at the same time, you know how much rental prices have skyrocketed because of inflation.
Exactly, and that's where, like, as a landlord, I always say, do 12-month leases and just renew them. Right. Now, after your 12-month, don't keep them month to month.
Yeah,
like either give them 60 days. A lot of apartment buildings, and I remember when I was renting and I was a renter, how they would get me is they'll say, okay, your 12-month lease is almost up. If you renew now, and they'll contact me at maybe like 9-month, 10-month point. Mm-hmm. They're like, if you renew now, we'll keep the rate the same. It'll just be $25 more dollars a month. Or if you wait till the end of the 12-month, then it's going to go up by $200 or whatever that amount is. So those are like little tactics that
they always use.
Use. But I always look at it like this, especially with people that own townhomes and homes, or that rent townhomes and homes. When you're in a home, you're not gonna move in a year. Like, especially if you have kids and you're established, like you don't want to be moving. As a young man, when in my 20s, like I didn't care if I moved from one place to the other. Like I'm young, I'm by myself. When you're more of a family and you're still renting, you want to be somewhere where you're going to be established. So you got to look at those things. And a lot of times people don't think, again, it goes back to the now versus the big picture of things. Like if you have young kids, and you get into school and this and that, you can really set yourself up in a place for a long time. And a lot of those times you can also talk to the landlord, and you can probably get into a position where you can buy that property.
Yeah, that's the whole concept of rent to own. It doesn't happen a lot now. Yeah. But if you get a great relationship established between yourself as the tenant and the landlord, it is possible.
Yeah.
And that's why people ask me all the time, why do rent to own deals not happen? It's on you as the tenant. Yeah. You have to get a great relationship established, and then get a realtor involved just to write the contracts
and get those things going. And I mean, there's so many options we can talk about. Yeah. Maybe I think one of these episodes we can probably just talk about just what it takes to be a landlord.
Yep.
And then kind of just break that down in depth.
For sure.
But for now, I think we are pretty good for today, and hopefully we can come back next week. This is our 10th episode, so
episode 10.
We made it to 10 episodes, and next week will be 11. I hope everybody can tune in.
For sure.
Leave some comments, leave some concerns, throw some emails and questions at us.
Yeah.
Whatever we can help and answer, we will try to answer. And again, I'm Abel.
I'm Burhan.
And we're with H2IL Properties, and this is the Real Estate Talk. You guys have a good one.
Take care, guys.